had a bigger stock bubble than anybody, but real estate bubbled everywhere. Australia and New Zealand have an unbelievable real estate bubble. And the number one real estate bubble in the world is China. China's stock market, okay, yeah. But everybody owns homes. Poor people own sometimes 2 or 3 homes, and 1 or 2 of them sitting empty in China. So China is going to get hit the hardest by this. Australia by being next to them. The whole world's baby boom is turning down, except for Australia, New Zealand, and Norway and Sweden, a few small countries. So this is a back to reality now that the baby boom and all the stimulus has gone as far. We go back down to reality, and that just means stocks go back down to early 2009 lows, real estate 2011, 2012 lows.
In today's video, Harry Dent, author of 0 Hour, talks about what's up with bonds, the next moves of the Fed, the raging inflation and the coming recession. Dent has been predicting a great reset of the biggest financial asset bubble in history. The market historian predicted a painful crash in stocks and an economic depression, and discusses the next moves before the big crash. He believes that the top is in and the Fed is tightening aggressively. Could the markets make a new high? Before listening to him, please ensure to smash the like button and subscribe to the channel.
And how is this affecting the global markets? If you can't buy bonds, you can't buy gold, you can't buy real estate in the U.S., where do you go?
Well, it's a real estate everything bubble, every stock market bubble. Like I said, I'm going to Australia and say, hey, your market's going to go down 50 to 59%. That's going to look very good. The UK and European market is going to go down more like ours. Maybe not quite as much. We had a bigger stock bubble than anybody, but real estate bubbled everywhere. Australia and New Zealand have an unbelievable real estate bubble. And the number one real estate bubble in the world is China. China's stock market, okay, yeah. But everybody owns homes. Poor people own sometimes 2 or 3 homes, and 1 or 2 of them sitting empty in China. So China is going to get hit the hardest by this. Australia by being next to them. The whole world's baby boom is turning down, except for Australia, New Zealand, and Norway and Sweden, a few small countries. So this is a back to reality now that the baby boom and all the stimulus has gone as far. We go back down to reality, and that just means stocks go back down to early 2009 lows, real estate 2011, 2012 lows. And people say, oh, that's no big deal. No.
It is a big deal. Yeah, you're talking about the big short on steroids.
The S&P, 92% in the NASDAQ, and 50% in average real estate, 60 to 70% in upscale ritzy real estate. So this is going to be the biggest shock we have seen in our lifetimes. Again, more like the early 30s, maybe not quite as extreme. That was just a naked crash. They didn't do anything to stop it. No stimulus, anything, no cushioning. And it'll be the biggest. Our kids will not see a crash this big, I think, even when they grow up and they're in their 40s.
Let's hope not.
Yeah.
Yeah. Changing gears on you, Bitcoin, where is that going? Is that the same, in the same boat as gold?
Yeah. The first, now we've had, this is the second stock bubble. It's the second in particular tech bubble, with more extreme, and the second real estate bubble. We've never had double bubbles in any of this. Real estate never bubbles, crashes and bubbles again. So the first tech bubble peaked in May of 2000, okay? Guess what drove those? It was Amazon and the new .coms only from 97, late even in that surge. They came in the last 3 years and really bubbled it up, and they crashed the most, okay? So the NASDAQ went down 58%. Amazon went down 95%. The .com internet index went down 94%. So that's what I see. This time it is the cryptocurrencies. Now they're not part of the NASDAQ this time, except for a few Coinbase or a few people got on or something. So crypto is the bubble of the bubbles. It is the most extreme. Crypto's gone up. Bitcoin's gone up the most. Bitcoin, just to go back. Now listen to this. I said, 2012 for real estate, 2009 for stock, just to go back to its late 2018 lows after the last crash. It's going to get a 95, 96%, just like Amazon and the .com. So crypto
when is this going to happen?
Bust the most.
When will this bottom out happen?
I think actually that Bitcoin may actually physically bottom on the next crash down ahead of stock. That'll be a third wave down with another fifth wave to follow. I think that might be the final bottom in Bitcoin, but then it goes more sideways and retests that bottom. You may see the worst in Bitcoin by early next year. And again, my prediction, just back to the 2018 low, but that's $3,233 from 69,000. What is that? Guess what? Just like Amazon and the .com, 95%.
So you're thinking
the biggest bubble, the biggest burst. So if you, and even at 20,000 here now, go to 3. It's still going to be down another.
You're thinking January is when we start to bottom out on Bitcoin. Is that the same with commodities?
That is. I think we could bottom in Bitcoin as early next year, and stocks as early as late next year. Now this all could go a little longer. I have on the outside mid to late 2024 for bottom in stocks, because again, the central banks have pushed this out and out. Okay, natural cycles, we would be bottoming earlier. So the earliest for the stock market is late 2023. I'd say the earliest for Bitcoin is maybe early next year, and even after that, I don't think it's going to make much progress. Stocks don't come out of this till sometime well into 2024, and Bitcoin really won't come out of it strongly until just before that too. Normally, Bitcoin leads stocks by about 7 weeks. So I'm just saying the Bitcoin though did bubble the most, gets hit the worst. So it may actually technically bottom several months ahead of stocks, but it doesn't mean it's going to come running out of it.
So hold on, basically, just to find something.
Well, I'm not holding on to anything. Again, you hold through normal 10, 20% stock corrections. We've gotten them all through the boom, even occasionally a 50% crash, like we had, 40% in 87 or 50% in the early 2000s. But the markets come back to new highs quickly. The markets are not coming back to new highs for 2 reasons. The millennial doesn't even start their next boom until sometime in 2024, and will take 15 years to build that. And the central banks, after more and more stimulus, for this thing to fall apart just 2 years after 10 trillion, by the way, is 46% of GDP. You imagine explaining to your grandkids, well, our central bankers thought we should spend 46% of our GDP just to keep a tired boom going another couple years. How does that sound, kids? Would you re-elect those guys? Huh? Yellen, and Powell,
Sure.
and Bernanke, and all these guys, none of them ever had sex or run a business. I hate to say it, but they're not even in the business world. Janet Yellen looks like she came out of a nunnery. I hate to say it, but it's true. Where'd she get that haircut? These are the people that have been feeding this bubble the most. Everybody feeds it because we all a bubble is something for nothing. Stocks and real estate. Real estate normally goes up with inflation rate. What's that today? 1 to 2%. Well, it goes up 10 to 20% a year recently. We're getting a free lunch. This lunch gets taken back when the central banks lose control or the bubble gets so stretched that it just blows anyway. A lot of the bubbles in history, including the 2000 bubble in tech stocks, the recession came a year later. It wasn't the economy or recession that killed the bubble. The bubble killed the bubble. Stocks just got crazy and they finally fell apart. And then when the smart money starts selling, then everybody follows.
Well, everything you say is based on some sound reasoning. I will tell you, it's doom and gloom. Is there anything you are optimistic about?
Well, basically, yeah, I'm optimistic about buying the best stuff. I will actually, you get Bitcoin in that 3 to 4 or 5,000 range, I will buy Bitcoin. It may be an invisible coin, but it's got complex technology behind it. And it is blockchain. Somebody at my own conference, a speaker, Mark Usap, explains that it's the digitization of all financial assets and money. The biggest number I threw out earlier, 577 trillion in global financial assets, and it's probably already, that was a couple years ago, last time I could tag that and put it all together. It's gonna be 600 trillion by the time this bubble is bursting. That's the biggest number in the world. If you can digitize that and make that much more efficient and easy to buy and sell and measure and stuff, that's the next wave.
Well, I think you have guys buying it already. So
crypto's a big deal. It's just in its infancy, and it's hard to understand how an invisible coin could be worth $69,000. But my projections, and I'm just doing it with the .coms, a similar wave that peaked in the last tech bubble, crashes 90%, and Bitcoin ends up between $500,000 and $1 million a coin.
Wow.
And at that level, it would be worth well more than all the gold in the world. It would end up being the global standard for a new global digital system of money, where that is the standard. Gold can't be the standard for a digital world growing at 5-6%. Gold supply is only growing at 1%, and it won't even grow at that forever.
Well, so and at $500,000, it makes
by Bitcoin.
It makes the guys who are buying it at 4,000 seem pretty smart, I guess.
That'd be the first thing I'd buy. Now, I want to diversify, but again, why would I buy any stocks? Maybe better stocks will only be down 40% from here, and others will be down 70 or 80 from here. Why would I buy any stocks? All stocks go down pretty much together. And there might be a few you could find that won't, but I'm not going to waste my time looking for that. I got too much to do. So I'm into being only in my best thing is TLT, is 20-year average treasury bonds, which you can buy and sell easily. ZROZ, Z-R-O-Z, is 25-year average. That moves 50 to 60% more than TLT. So that's what I would buy. It's a little less liquid, but it's still plenty liquid for everyday investors like me or anybody listening to this, okay? That's where I have my money now, okay? If this the more this crashes, that's the safe haven. And you know what? People say, oh no, Harry, it's gold. And I got Peter Schiff right down the street from me in Puerto Rico. It's gold, it's gold. Gold went up in the early stages of the 2008 crash because people thought it would be the safe haven. When you know what hit the fan, gold went down 45, 50%. Hey, not as much as other commodities, not quite as much as stocks. Gold went down, okay? I'd buy gold a few years from now because the fastest growing large country in the world is gonna be India, not China. China has way overexpanded. Their demographics have already peaked. No, the only emerging country that's had demographics already peaked. Nobody knows that. India will be the next big monster growth in Southeast Asia and South Asia and all of that. And they love gold. So I wouldn't mind buying some gold in my portfolio when it's down to 900 to 1,000. That's my target for gold. I'd buy some, but gold's still not going to beat the best tech stocks or Indian stock market or Asian stock markets or the NASDAQ. But it's a good diversifier. But no, gold is not the safe haven. And I don't know how anybody can argue that when 2008 already proved the worse it got, gold finally caved in and ended up being down 45, 50%. Again, you had to buy a bunch of commodities, it would have been the best. It still went down. Why would I have my money in gold? Until it goes back to its support right around $1,000. Then I would buy some gold.